The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. This is our Futures Hour. If you have any questions, it's 877-927-6648. I'd like to start the show today for everybody to do a little practical homework, and that is to go outside tonight if the sky is clear and look up at the new moon forming, and you'll see Venus at night, of course, because it's the evening and the morning star. But if you'll take a look at it, you'll see how incredibly clear and beautiful it is, and how the new moon is coming into conjunction, which is 0 degrees, and it lines up perfectly. Now, Venus is very important for trading because it moves around the Earth every 224 days. You divide 224 by 365, you come up with, guess what, 0.618. Well, Pythagoras knew this 600 BC, and he also knew that the Earth was 250,000 miles from the moon. He had already calculated that. This was before 2,000 years before Columbus discovered America, where they thought the Earth was flat. And so this is what a smart dude Pythagoras was. He was he was the first man ever to use the square roots of numbers, and he also had a oh dear, I've lost my train of thought. Good. Thank goodness we've got our first caller in from California. Brent, are you there?
I am, Larry. Good morning to you.
Good morning. How are you today?
I'm doing well. I wanted to thank you for your work on gold and silver yesterday. I appreciate that.
Well, we got to cover it some more today because we're coming into this time on Monday, so it'll be interesting. What can I do for you today?
I was calling about sugar in particular today, and I have some numbers that I'm working with. I'd like to give them to you and have you double check to make sure I'm right, if you don't mind.
Sure. Why don't you go ahead and fire away? Let me write them down, and we'll take a look at sugar together.
So I'm doing this on a daily basis. So I have 14.92 is the bottom.
Okay.
18.47 is the top.
Okay.
It looks as though we've just completed a 50% retracement down to 16.67.
Yep, absolutely. Spot on, we did.
Okay, and then I'm assuming a 1-to-1 off of that would be 20.22.
That's correct. We could very easily do that. What I'll do is, I was looking at sugar a little earlier for someone, and I never trade the stuff. I haven't traded it for many years. Not that it's not a great thing to trade, it's just that there's so many other things that are easier to trade. At least from my perspective, that's the way I look at it. So give me 1 second here, and we will have this in here, and we'll be able to take a look at it. I've got one piece of bad data that I've got to correct, and then we'll be ready to go. How's your drought area up there? You must have got hit really bad, didn't you?
Yeah, we actually have had some good rain the last couple of days. There's more coming this weekend, so that's good news for us.
Well, you need it. I went through Cachuma Lake this past week, and it was unbelievable, the fact that it was empty. I'd been there going that area for 50 years. Well, you had this spot on. That's exactly a 50% retracement, and it looks like it's ready to, get ready to have a move to the upside, what it looks like. Let me put this in so everybody can see it, but it just made a perfect 61% retracement. Now, you're still in a major downtrend here, Brent, so what you want to do is you want to watch that 18 level very closely, because that's going to be your 61% retracement coming out of this last move. So if it doesn't move into new high ground really quickly and can't get above 1800, then I would be assuming that this rally that we had from 14 to 18 might be over. So you have to watch that level of 18 very, very closely.
Okay. I appreciate that.
Okay. Anything else I can help you with?
Oh, I think that's it. You were just talking about reservoirs. It's a little frustrating. I've been in this state my entire life, 53 years, and unfortunately, they'll get panicked and they'll release water out of the reservoirs, and to me that's just silly because you can't put it back, and so now they're kind of obviously in this situation they're in, and that's a little bit they brought it upon themselves in some respects. So nothing you can do about this point. It's out in the bay at this point. So
absolutely.
Yeah. Okay, all right. I really appreciate it, Larry. Have a great week and a weekend, and I'll hopefully talk to you soon.
Okay, thanks for calling in, Brent.
All right, take care.
You bet. Okay, we're going to talk about the gold and silver. I posted into the Tiger Den today the XAU, which is the gold and silver index. We hit the 786 retracement in this about 10 days ago when we were making the full moon, and now we're coming down into this new moon, which is going to be a very, very important one because we have Venus making a lunar conjunction at that time. So they'll be lining up very, very, very positively for gold, I believe, on Monday. And we're going to go through this whole sequence of gold and silver because I think this is a real critical test here in gold and silver both, because if it has any chance at all, it's got to hold these lows coming in what we think are on Monday. And if they can do that, then they've got a chance to really go. And of course they don't, then they can really go down. So we have to watch that and just keep our eyes fresh on what's going on at that time. Now, we're going to take a look here at the gold market itself here, and we'll just look at it right here for just a second, and I'll put it in here so you can take a look at it. Well, we have a 61% retracement down about another $26, $27 coming in around the 1262, 1265 per ounce level in gold, and that should be a pretty good support. That's a 61% retracement of that move that we had from December through January. And we have the new moon coming in. I'll keep mentioning this because I think it's that important. We have the new moon coming in, on Monday, and we'll see what's happening. In fact, we're having this sell-off in stocks coming down into the new moon, and if we're down, Friday and then down again Monday, we're probably going to hit a pretty, at least a short-term bottom in the stock market. But if we get below 1821 between now and Monday in the S&P futures, that's a very, very negative sign, folks. That means we've broken a cycle low that is very, very powerful. It couldn't make new highs. It could only make a 786 retracement. And so this is something that we have to keep in mind for stocks. But this is the commodity hour, so let's try to focus on the gold and silver. So we're looking at gold at the 1262 level as the 61% retracement. Now, when we came down, we made a perfectly symmetrical ABCD. This was one of the easier trades that we had when we were down around that 1170 area, because the AB leg was exactly equal to the CD leg in both price and time. And that's one of the Gann's principles of squaring price and time, which is all part of the geometric ways or characteristics to look at the market. And so that's why it is so very, very important. If we take a look at a long-term weekly chart on the gold, I think you'll see what's happened here because we hit that 61% retracement so very perfectly that it makes us look like we've had a tremendous move up. And the fact that we stopped exactly at the 786 of that last move when we were out at 1392, that's very, very important, because if we come down and we hold this 61% retracement and then go above 1392, you're looking at $1,600 gold, folks, and that's $500 off the bottom. And believe me, gold can go very, very quickly, as you can possibly imagine. If we go back in time, you'll see that when we were making this huge ABCD pattern on the bearish side, when gold was at 1800, it completed the ABCD pattern back in October of 2012, and then we came down. We were down well over 2.5 years from a high at 1932 per ounce, and so we still have a chance. It's still bearish right now, but we still have a chance for it to move. If we go below the 1240 level, to me that would be very, very bearish. But we've got a chance looking at gold from where we are right now, and the reason for that, I posted in there the XAU showing you that we're at the 61% retracement in the gold and silver stocks, and that's very important. And even though I don't trade silver that often, I want to bring this to your attention because this is one of the things that we're watching, because it's been such a good indicator as far as being able to tell us where we are in the overall picture of what we're looking at when we're looking at time. And all we're going to do now is we're going to take a look at silver on a daily basis, and you'll see that the AB leg that we started back in late February down into early March, and then from middle of March to where we are now, coming into the 31st, and then the 1st, of course, is April Fool's Day, which is always a good trading day, because, well, I won't mention this. I'll keep my mouth shut. And, well, I can't remember what that was about, in order to remain a fool, or I don't remember who said that, but it was very funny. Anyway, the market is coming down into this new moon where we have a perfectly square ABCD pattern in silver. The 786 in silver comes in at around $19.40 per ounce. So our key thing to look at now is when we come in on Monday is to watch the level of 1262 in the gold and watch the level of 1940 in the silver, because at that point you'll have price and time being squared. If we're far below those levels, that's going to tell us that there's something wrong, and that we're probably going to have to be looking at something that is going to go a lot lower. So the timing is set for gold. It reacts to the lunar cycles very well, the 14-day lunar cycles, the full moon to new moon. So it's all coming together. The question is whether it's going to hold or not, and we'll know this when we come in, on Monday. So the levels to watch on the gold are $1,262 an ounce in gold and $19.40 in silver. Those are the key levels that we have to be watching for in the gold and silver when we come in here on Monday. This is very similar to what we were doing in December when the gold was bottoming down around the 1180 level. We talked about that. We showed you what to do. We were watching the stock of Barrick Gold, and that was doing just absolutely perfect symmetry. In fact, what we'll do is we'll put the chart of Barrick Gold up here so we can review it, because it's also going to be coming into a pretty good buy zone, as I believe also. So let me put this in here also, and you'll be able to see Barrick is doing exactly the same thing. And if we put this up so we can see everything together here in Barrick Gold, you'll see that we're having the same situation occur. Oh dear, if I can make it just a little bit bigger, I'll be a happy camper. That's a pretty good size. Let me move it over just a little bit. We'll take a little break here. We got the Dow down a little bit, the S&P down a little bit, and the NASDAQ down a lot.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks. I want to, since we're on the Commodity Hour, I really like to reach out to you folks out there that are listening that have an interest in commodities, because you have a chance here to listen to Andy Hecht on Friday for his 3.5-hour seminar. He's been around for a long time. He's a specialist in commodities. He knows not only the technicals, but he knows the fundamentals really well. And I highly recommend that you, if you have an interest in futures, to do it for 2 reasons. One is Andy specializes in 2 areas that are very difficult for some people, but he makes it relatively easy. And one is spreads, and that is where you're buying 1 month versus another one, like July versus November soybeans, or May corn versus December corn, because they're different months, so that makes them, or different crop years, so that makes them a different thing. So he specializes in that, but he also does something else that came along long after I've been doing this, and I don't do much of it, and that is the ETFs for the commodities, because they have some very good ETFs that allow you to to do that, and some of them you can use for your retirement accounts where you're not able to use futures. You can use the ETFs, and what he's looking at, he's not looking at short-term scalping type things. He's looking at major type developments, and this is something that's very worthwhile. So if you have a interest in it, I highly recommend you attend it. Now, I'm doing this because I really believe it, folks. I don't get anything from TFNN or Andy or anything about this. So it's because it's a really good thing, and it'll help you. And I know the information that TFNN has is really terrific, and this is one of those things that is very, very good. So in fact, just about everything that TFNN has is terrific, or I wouldn't be involved with them. In fact, I'm probably the weak link in the chain, but they've got some really great stuff in here. And so really kind of, if you have an interest in commodities, I'd really recommend it. And it's hardly, it's very, very, very cheap, so or inexpensive, let's put it that way. Okay, we're going to talk here a little bit about American Barrick. because I posted the the stock chart in here, and as you can see, we're looking at some similar time and price patterns coming up with the American Barrick, and it's making a Gartley pattern up in this area also, which is making it a very interesting pattern to look at. If you'll give me a second here, hopefully I'll be able to show you the Gartley pattern, and you'll be able to see it a lot clearer. I forgot to draw it in. Okay, this should do it. Maybe it'll do it. I don't know. Yeah, this will do it. Hold on here, and then you'll be able to see the Gartley pattern in the American Barrick. We are very, very close. We're trading right at the 61% retracement here in ABX. So if it's any good, it should hold right here between 17 and change, 1770. And if it gets really weak, and that would put gold down to the not another $40 or $50, we could get all the way down another point to 1685, which would be the 786. It would still be a complete Gartley, but it would be coming in at the 786. And what we're doing here is we're looking at the time sequence, because the time sequence we're using with silver and with the XAU and with the gold and silver index. That is the gold and silver index. The XAU is also, boy oh boy, we're using silver and the XAU to determine where the time might be to tell us where the gold and silver might bottom, and that comes in on the 31st, which is Monday, and it's also the new moon and the Venus conjunction. So all of this should be very, very interesting as we come into this time frame on Monday for the gold and the silver. I'm going to repeat one more time, and then I'm going to let it go. The numbers in the silver to watch are $19.40 per ounce. The number in the gold to watch is $12.62 per ounce. Those are the corrections that we're looking at in the market. So keep that, write those numbers down, and if they work, they'll work pretty good. If they don't, then it'll be, be one of those times where it just didn't work. But at least you'll know right away whether it's going to hold or not. If it does, it's going to have a pretty substantial move to the upside, and that's what we're keeping an eye on with. The gold and silver. Copper had a pretty good rally, and then it gave most of it back, so it's still quite early in that move to see if anything is going to happen at that particular time. But I think copper is still heading lower. It has been in a bear market for well over 2.5 years, and with the negative news coming in from China nowadays, it makes it a little bit harder to be a bull on copper, because things seems to be slowing down in copper, and that's relatively negative. So we got the Dow down a little bit, and the gold down, and so we're going to take a little break here.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're going to talk a little bit about crude oil, and when we finish with crude, we'll go into the grains, and then we'll also cover the hog market, because I think we've hit something really, really significant in hogs. I know a lot of you people enjoy ribs as much as I do, but and that's one of my favorite things, and they have, COGS have gone up 20% just recently, so we'll talk about that in a few minutes. But we're going to look at the crude oil market right now, because we are completing a perfect Gartley pattern here, where we have a major downtrend, that started, it started back in 2008, but from the last high that we made back in 2013, we are coming down to, or coming up to a perfect 61% retracement up in this 101.70 area that we've hit so far today. It's a perfect ABCD Gartley pattern, and it's just lined up as beautiful as it possibly can be. And the $64 question is it going to go busting through the 103 level and see if it's going to stop? But this is the area around this right around 102, where crude oil should run into a great deal of resistance, and that would be something that would start it to the downside. It's been in a very, very bullish mode ever since it made its bottom back at $33 a share back in 08, when everything was too big to fail, including crude oil. And so now what it's doing is it's just in this really tight range, completing this bearish Gartley. In fact, it's such a nice pattern. I'm going to blow it up so that everybody can see it see it very, very clearly, and then you'll be able to get an idea of the exact price we're looking at is 102.40. So the key here is to watch the crude oil at the 102.40 level, because that's where we have a perfect AB equals CD retracement coming in at the 61% retracement, and that would be the place where you'd want to be watching for potential to get ready to go short. And if you get above the 104 level, then that takes a whole different meaning in crude oil, because then you'd be looking at something into the 112 area, because you'd be completing a very, very large ABCD. But remember, it's taken well over 2.5 weeks just to get us to this spot where we are right now. So there is some selling coming in. We blew through the par level, which was the 786 over the last several days. That was very easy to see once we popped through that it was going to grow a great deal higher. And so our target on this is the 102.40 level in crude oil. That's what we would be watching. So we'll keep this in mind as we go through here. Now we're going to take a quick look here at live hogs. We'll switch from oil to live hogs, because live hogs has been I haven't traded these in a very long time. I didn't trade them during this whole run, and we are looking for a place to go short. We think we found it, but it's still relatively early. So let's just take a look here, and we'll see if we can get this live hog chart up for you. And you can see that we've made a 3 drive to a top pattern here in the live hogs up at this 126 level. This is a weekly chart that I've posted in here, and you'll see a few gaps there where they roll over from the April to June contracts. It basically takes care of itself as far as continuation charts, but the level that we're looking at here is around the 126 level. It's hard to believe that back in August of 2009, hogs were trading at $43 a pound, and now they're 3 times that price. And it's been one heck of a move. So it's nothing like Google or some of the other things, or Bitcoin. In fact, I don't know if Bitcoin's still in business anymore. I heard somebody at one of their on the TV that their exchange filed bankruptcy, but I don't follow that. It's not a significant thing in my opinion. So we're not going to worry about it. Okay, now we have the growing season getting ready to start here. Very, very shortly. We'll have Rich Anderson on next week, is my hope, and weather getting better, we're going to be a lot easier to get him on the air and stuff. So we're going to switch gears now and move over to wheat, because we've had a very strong move in wheat several months ago when we were down at the 550 per bushel level in wheat. We were completing a beautiful 786 retracement down at that level, and we've moved well over $7,500 in a matter of 2 months, and we're still on the upside. We had a crop report come in yesterday. It was friendly, a little friendly to corn. It was not friendly to wheat, but wheat didn't make any difference. The wheat's still moving higher, and it was also slightly friendly to soybeans, and they're all starting to move a little bit. Remember, they're just starting to plant the corn. Wheat won't be planted till later. Spring we won't be planted till a little later, but corn is getting ready to be planted now. And some of the frozen land that we have through the Midwest is probably going to affect how much corn they can put in, because if they can't get it in, they have to switch the crop from corn into beans, and that'll make a big difference, because corn is our largest crop, our largest agricultural crop here in the United States, and so that's a very important part of our economy. And so the weather this year being the coldest that it's ever been, I believe, in most of the United States, and Philadelphia had more snow this year in all recorded history. And that's a pretty significant thing, since this is where our nation founded back in, I think it was 1776, I'm not sure. I remember it was July 4th. I wasn't in school at that time. I didn't start school until 1779, so that was a little bit before my time. So we're going to be looking to buy wheat on any pullback that we can get, and we're also looking at corn. And what I wanted to do here is to show you that there's two types of corn. There's the May corn, which I'm going to post in here right now. If you'll give me 1 second, and you'll see I'll post the May corn. You'll see we went up to the 786 retracement here in May corn and stopped. And we have, we're looks like we're building a strong base here to break out even more to the upside, but ideally we'd like to see a move to pull back in corn so that we would be able to do it. Now, the corn that I posted is May corn. This is the corn that was harvested last year during October and November, okay? So that's in the bins. That's what's being shipped to exporters right now. But the December corn, which is the corn that hasn't been planted yet, that's the one that people are speculating with, because that's the one that has the great potential, because if anything happens to this crop, there's no crop to back it up. And that's the real key of what we're looking at here. Now remember, we've rallied about 50 cents a bushel in corn over the past several months, which isn't very much. So if we're fortunate here and the market gets some bad news and we can back off a little bit in corn, maybe down about another 30 cents a bushel, down to 4.54 a bushel, we would be making a 61% retracement in the corn. And from that level, I would be looking to be a buyer in that particular instrument, because when we made the bottom down at $4 a barrel, we were almost at $4 a barrel, $4 a bushel. It was right up at a beautiful ABCD pattern on the long-term charts. We were recommending buying down in that area because it was such a beautiful ABCD. I have to put that in there because it was such a nice pattern coming in at that time. And we did have a very good rally. We haven't made the 61% retracement, which is up another 15 cents, but that's the December corn, and that's the one that is going to get all the attention, because if anything happens to this crop, we're in big trouble, because the other crop is already in the bins and being sold, and if we don't have a big crop coming in this coming year, which will be reflected by the December crop, then we've got big problems. These are the kind of things that Andy Hecht is really a master at, and can help you determine, which option you want to be trading. And what I mean by option, I mean the actual futures contract that you should be trading, whether it's May or July corn, or December corn, or March of 2015. He knows these spreads very, very well, and that's what's really great. And you can buy July and sell December. There's all different kinds of spread opportunities that you can have to buy old crop, sell new crop, that are really right down the gun side of what Andy does. So if you're into futures and you want to learn some of this stuff, Andy's going to be on the air tomorrow for a 3.5-hour show that will be certainly well received by everyone. So if that's what your interest is, keep an eye on it. I've had a question here about the Japanese yen currency, and I wanted to bring it out to you and show you where we are right now, because this has a very high correlation with the Nikkei market, and the Nikkei market has turned down, big time. And so if we can get the Japanese yen currency to go under the 101 level, we're trading at 102 right now, but if the yen would drop below the 101 level, that would be a real serious breakout to the downside, and that would usually mean that the Nikkei, the Japanese economy, is in some kind of problem, because of the fact that the correlation between the yen dollar and the Nikkei is better than 90%. So right now it's just making lower tops ever since January. We completed the Gartley up here 2 weeks ago. This Gartley that we're seeing in the Japanese yen, looking into Tiger TV up at that 103 level, that's exactly the same type of Gartley pattern that we're looking at here in crude oil at 102.40. And so these are the types of things we're doing. We don't know which one of these patterns will work, but we do know that the probability of them working is greater than the probability of them not working. Those of you that have not looked at Gartleys before, you should test out Tom O'Brien and David's program that they have on finding these patterns automatically for you, because they scan well over 5,000 instruments every day to come up with the patterns that are lining up, very, very easily. And that's the bottom line of what we're trying to do when we're doing this. Now we're going to switch our thing over here to soybeans. And what I'm going to do now is I'm going to, give me 1 second here, I'll get this all ready, and I'll be able to see it all at one time. And you'll see that we are making a 61% November soybeans. Now here again, we have the same situation in soybeans that we had in corn. There's two different crops. There's the May and July beans. Those are the beans that were grown and harvested last fall. Okay, and then we have the November soybeans, and these are the ones that will be planted will be planted in May and be harvested in October and will be delivered in November. So November soybeans are the new crop soybeans, and the others, the July and the May, are the old crop soybeans. And people watch those spreads, because if the price of one soybean is more, like if the nearby soybeans are more expensive than the faraway soybeans like November, in other words, if July is greater than November, it tells you that the demand for soybeans is so strong that people are willing to bid up the price of soybeans because they want delivery now. And that means that the importance of the crop is absolutely unbelievably important, because if they are willing to pay up for beans during when they can, have to buy them, what's going to happen if the crop starts to have a problem or something, it makes November soybeans become even more valuable, because there's no other soybeans to get once they start to harvest. So these are things that are important to look at when you're watching the supply-demand situations, when you follow the fundamentals, and it will get to that point. Now, I basically just look at the charts. I don't look at the fundamentals too much. Well, I don't look at them at all anymore. I used to years ago. I used to count every soybean, but I haven't done that for years. I just look at the prices, and that tells me whether I want to be a buyer or seller. It gives me the parameters that I need to look at for risk control, and that's what we're watching. So what we're looking at now is potential to put a short here on November beans, because I believe we're going to have the crop get in on time, and then we'll have a few crop scares like we always do every year, but ideally would get a nice break of about 60 or 70 cents per bushel to get November soybeans down to that $11.30 level. When I talk about these prices, it really blows me away, folks, because I've been trading beans since they traded at $3.50 a bushel, and I was in that big bull run during 1972 when they went from $3.50 a bushel to $12.90 a bushel, and those were life-changing moves for many people, including myself. And when these things go, they really go. If you think things are really great when you're watching, gold and silver and crude oil move, believe me, folks, if food ever gets scarce, you'll see moves like you've never seen before, because gold and silver and oil are indigestible, whereas you can actually eat the soybeans, and it's the most perfect product that you can have to eat, because it's so highly protein involved. That's what tofu is, of course. Most of you people know that. But, beans are basically crushed into soybean meal, which is used in tofu and feed and stuff like that, and a lot of different other products, dog food and human food too. But because it is so very, very good, and it's also crushed into oil, which is basically your soybean oil. Okay, we got the stocks in a little bit of a rally here, and gold is still heading lower, so we'll wait and see what happens next, and we'll be right back for the final moments of the show.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and I've posted into the Tiger TV. I wanted to end the show showing you the New York Stock Exchange Index going back several months, and you'll see that it's completed that 1, 2, 3, 4, 5 expanding triangle. The key is to watch the March 17th low. As you can see, that number is 1821 on the futures for the E-mini S&P. It's 15,900 in the Dow, so we're considerable distance away from those levels. But if that breaks, that was such a big, powerful cycle that it really means a lot that it should actually hold that level. And if it doesn't, it's going to be, very, very interesting. However, if you'll remember that the NASDAQ was the market that took the, we went up to the upside with the we hit the exact 61% retracement today in the NASDAQ, but we've also taken out the low from March 17th. So that tells us that this cycle is starting to go down. Now the S&P hasn't taken it out yet, so that's actually a good thing, but we'll have to wait and see. But this thing is really starting to accelerate to the downside just a little bit. Now the VIX index is showing absolutely no fear at all. I mean, they're just made a slightly lower low yesterday and then bounced up, but it hasn't really shown very much at all. So nothing's really happening yet. This is a Thursday. We have Friday to see what happens on the close on Friday. One interesting statistic is the S&P 500. If it closes above 1850 on Monday, the 31st, that will be 5 consecutive quarters that the S&P had closed higher. There's only one other time in history that has occurred, and that was in September of 2007 when we finished the fall quarter, and it was up for 5 consecutive quarters. So this would break a record, or tie the record, if we do it again this year. And we could certainly do it because this has been the biggest bull market that we've ever had. It far exceeds the one from 2007, and also the one from 2000. So just keep in mind that the key to look at, key to watch, is that number in the S&P at 1821. Because if we break that, we've already broken it by quite a bit in the NASDAQ, but we still have not done it in the S&P. So New York Stock Exchange Index, I posted that one in there also, and it hasn't broke the lows that we made a week ago, Friday on the 17th. That is such a big cycle. It was 10 days ago, sorry. But that was a big cycle low, folks, and that should have given it a lot of power to take it into new high ground, and it hasn't done it. If it gives it up very, very quickly, that means you're looking at what they call left translation in cycle theory, and that means that the cycle peaked very early, and that means that it's going to go down for 5 or 6 weeks, if that is in fact what is going to happen. But it's still relatively early to see if that is going to happen, but we don't know yet. As we have more time, to look at these things, you'll be able to see, where we are within the text of that. But if we close below 35, 36 in the the Nasdaq today, that would be a very strong indication that we are looking at a very poor close on Friday, and that would usually mean more weakness coming in at the beginning of the week. But this has been a big bull market. The VIX has not given it up yet, but if we get the VIX above 17, then I think we will be starting to see some more volatility to the downside. All the patterns are complete. There's no question about it. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.